And now I request Mr. Harding to address the House.
Right, good morning, everybody. It's nice to see so many of you here, and thank you for coming along today to hear about this. What I'm going to be talking to you about this morning is our Global Economic Survey. We conduct this 4 times a year, and it came out today. I think in the way time zones work, you're probably the first people in the world that will actually be hearing about this. So it's very much hot off the press. I must say it's a pleasure to be here on your campus. It's such a change to get out of the rain and the heat of Mumbai and get up to this city and have a comfortable environment. This is a relatively new piece of work for us at CIMA. We're conducting this now in conjunction with our partners at the American Institute of Certified Public Accountants. The 2 organizations came together in January of this year to create a new designation for management accountants, CGMA. That stands for Chartered Global Management Accountant, and it's the one and only accounting designation which is recognized on every continent around the world. Many accounting designations claim to be global, claim to be international, but this is the only one which is recognized in North America, Asia, Europe and Africa. It actually ticks all the boxes. Taking you through this, we conduct this forecast on a quarterly basis, and it captures the view of Chartered Global Management Accountants working in businesses, supporting decision making in businesses across the whole world. And it looks to see what their view is of where the world economy is, in particular focusing on business. So what it does, it provides a quarterly check on this, and it highlights those broad perspectives, the concerns that business really has, and the concerns business is dealing with. In particular, it looks at economic optimism, both on a global level and on a more local level. It looks at businesses' expansion plans, their revenues, their profits, employment, their planned spending on IT and capital items, and training and development. So what it does, it gives us a really deep insight into the way world business is performing. And I guess if you read the newspapers, it will probably come as no surprise to you that around the world, people are not feeling too happy. If we have a look at this, the way it works, we've got results here from the last quarter of 2011, the first quarter of 2012, and quarter 2 2012, which is this survey. And you can see there, in the new year, an awful lot of optimism, improving in every sector. And then, disappointingly, that has fallen back in this final quarter. And I guess that's particularly true of Asia. Asia has been showing the strongest composite optimism, forward planning for growth for the last 2 quarters. But this quarter, Asia has shown the largest fallback of any particular part of the world. Now, some of that is to do with contagion coming through from US and European economic problems, particularly the impact that's having on China. China is still the powerhouse of world manufacturing. The consumers of that manufacturing are mainly based in the developed economies. If they're not growing, if they're in recession, then that damages China hugely. So what we're seeing here is, we're seeing in terms of organizational optimism, as I say, you can see these drops across the world. Europe in particular, you're seeing just having huge and dramatic swings. All of that influenced by the European banking crisis and the crisis around the Eurozone. You'll see UK, which is on the periphery of the Eurozone. Most of its major trading partners are Eurozone countries. So that, whilst reflecting what goes on in the Eurozone, isn't quite as an extreme an example. But what you're seeing there is a huge surge of optimism in Europe in the first quarter of this year, when people thought that the problem had been solved. In fact, all they'd done was put a piece of tape over the problem, and we've seen over the last few weeks how that has broken apart again. Interestingly, the European problem, it's mainly focused on Greece, but Greece itself is a completely immaterial part of Europe. If Europe was a business, you'd shut down Greece and you wouldn't even notice. But this is all about optimism. It's all about confidence and the way in which people can deal with things. And I think the biggest problem in Europe is, by not resolving and concluding the problems in Greece, it makes people worry about what else is going on in southern European countries, in particular Spain and Italy, which are most definitely material when it comes to the Eurozone. So in many ways, some of these problems have been brought on by the failure of European governments to come together and deal conclusively and effectively with the Greek issue. What we are seeing, though, is in both the UK and in some European countries with stronger economies, that whilst respondents to the survey don't feel optimistic generally about the economy, they actually feel quite upbeat about their own company's prospects. And I think you can start to see this when we look at employment prospects. Here we look at companies who think they have excess employment, in other words, those who imagine that over the coming weeks they'll be letting staff go, those who think they have the right numbers employed, and those who have too few employed, in other words, where there are vacancies. And throughout that, yes, we have, in every part of the world, with the exception of the UK, the majority of companies saying they have about the right number employed. Again, we see many more companies feeling they have staff shortages, skills shortages, looking to employ people and looking to recruit, than we have companies with intentions and plans to lay off. So that starts to give us more of this picture about individual businesses feeling far more confident about themselves than they do about the other businesses working around them. So it's quite an interesting feeling going on. And if I was to tell you that, and technically the UK economy is in recession. I work in London. When I travel to work, when I go out in London after work, it feels like a city that's booming. It doesn't feel like a city in recession. And I guess this is part of the thing. It's very, very patchy what's going on. It can go city by city. It can go business by business. I think what we do have out there is a very, very complex situation, and something which is very unpredictable, which is a real challenge to managers. Many senior managers at the moment grew up, gained their experience, and were very successful, or imagined they were very successful, when they were working between 1991 up to 2008. That period was unique around the world, with the exception of the short Asian crisis in 1997. The world economy boomed for a period of 16 years. In many ways, any competent manager could be successful in that period. What we're really seeing now is some real challenges to leadership. We're seeing people having to manage in difficult conditions, whereas all their experience have been managing in an upturned market, which I think we all realise would be an easier place to do business. So now we're seeing those real challenges coming into play. And we can see here what people believe the challenges are, and almost across the whole world, people are seeing the global economic conditions as being the number one challenge. With the exception of one part of the world, which is what we've described as rest of the world emerging, and that's going to be places like sub-Saharan Africa, South America, and their biggest question is around shortages of skills. And those are the economies where they are now ultra competitive in terms of wages. And that's an advantage which India has ridden for many years, China's ridden for many years, but now that's changing. Inflation, particular wage inflation, rising standards of living mean that piece of competitive advantage which India and China have had for so long is now disappearing and starting to be taken up in Africa, in South America. But hey, they don't have the skills to really take advantage of that. Looking at the other things, we then start to get differences coming in. We've got challenges in Europe around regulatory changes, regulatory requirements, what's going on there. In particular, what we're seeing coming up in Asia now is domestic economic conditions. Many of the Asian economies are seeing high inflation, and they're seeing falling demand for their key export markets, which is becoming a challenge. And equally in Asia, we're also seeing challenges around exchange rates, particularly in South Asia, where we've seen local currencies being devalued. And I was reading a local magazine last night about the problems that particular government policy was causing here in India, and that's replicated in other South Asian economies. As far as the Chinese economy goes, things are going the other way. The exchange rate's appreciating, and therefore their exports are becoming more expensive. Equally, their huge domestic inflation is pushing prices up again. So the Chinese economy is having a double whammy effect from that. Indian economy is balancing that with decreasing exchange rates, but then that's increasing the prices of commodities that you have to import, which is fueling local inflation. So you end up in a cycle. I guess importantly, something we need to be talking about today is banking, how that is going, what the issues are, what the problems are. We've seen a number of banking failures around the world. It all started with a US bank called Bear Stearns, which I think was in 2008. And that triggered the longest recession that the world has seen. No one imagined that these conditions would still be continuing 4 years later. But we're still seeing problems around banks. Today, Spanish banks have been given 30 billion euros of liquidity to ensure that they remain solvent. So this problem is far from going away. We're also seeing a confidence crisis amongst those banks. Last week, you may have seen the problems around Barclays Bank, headquartered in London. Their American chief executive had to resign as a result of effectively misleading regulators, giving false information around interest rates, which effectively made that bank look in a more healthy state than it really was. Now, Barclays is only the first of those banks to be pulled up on that. They've had the publicity early because they held their hands up to the regulator and said, yes, we did it. But there are apparently at least 9 other banks still being investigated. So we've not seen the end of this. So we have a crisis around banks around, yes, their liquidity, B, Secondly, and perhaps more importantly in the long term, we have a crisis around banking integrity. Now, against that, that's slightly mitigated in that we're seeing a shift of power in banking from the developed nations through to emerging nations. In particular now, the two largest banks in the world are Chinese. And what a feature of those Chinese banks is that they are state-owned, they're state-controlled. There is a huge amount of state intervention which requires them to maintain liquidity levels at a certain rate and influences their behaviour. Equally, Indian banks, again the largest banks in this country, there is a significant and substantial state ownership. So we're seeing a big move in that way. And the result of the banking crisis in Europe, in particular the UK, is that many of the UK banks are now substantially owned by the UK taxpayers. British government has some great ideas. It's going to sell these off and give them back to people and try and turn a profit on it. But like it or not, at the moment, the British government owns the British banking system. So there is we're seeing a big change there. Whether that will drive efficiency, or whether it will fail to drive efficiency, who knows? When you've got countries which score poorly on corruption indices, does it help that much to have that much state intervention? It's really difficult to tell. But what we do have, you can see, is there is a great deal of change. There is a great deal of uncertainty. Particularly what sort of things they're saying about China. We're seeing the government micromanaging the banking system. It's a very different system to that which banks are used to operating in. And I think in terms of the current crisis around integrity, there's going to be a drive for more and more of this. I think, generally speaking, the consumer no longer trusts the banks to be doing the right thing. So, what this gives us is quite an interesting picture. We've talked about how a lot of senior executives have been very successful in rising markets. They're now struggling in the more volatile and uncertain situation that we find ourselves. So let's have a look at what the challenges are, what people need to be doing. And in terms of what's going on, we've got a credit crisis. So managers need to be able to monitor, oversee, report on performance. In particular, financial performance. They need to be able to anticipate their business's financial needs in a way that they never have had to before. The economic downturn, that's all about understanding what cost leadership is. How do you maintain investment? How do you ensure that your company is actually fit for the long term whilst surviving the short term? And that whole thing is a really interesting piece. At the start of this economic crisis, it was widely mooted that companies in Asia were far better able to survive it because their owners, their leaders, their managers took a long-term view and were supported in that long-term view. And that gave them sustainable business models. We see that in companies like Tata. However, perhaps of great concern, or what should be of great concern to you as Asians today about to start your career in business, is that Asian businessmen surveyed at the beginning of this year felt under even more pressure than their European and American counterparts to deliver short-term results, short-term profit at the expense of the long-term sustainability of that business. So what has for a long time been a given and are taken advantage in Asian economies, we're now seeing people who are leading businesses actually saying, hold on, that world has changed. And when I go around the world, when I speak to young people, particularly China and here in India, what's your ambition? Well, I'm going to be an entrepreneur, I'm going to set up a company, and we're going to have a public offering, and I'm going to be a millionaire by the time I'm 28. And you're thinking, actually, that's probably just the kind of short-term thinking that got the Western businesses into trouble. This desire for the quick buck without thinking about the long-term sustainable interests of that business and how that business works with all of its stakeholders, including its employees and others, not just the owners. We're also seeing interesting things going on around sovereign debt. Particularly, we're seeing huge sovereign debt in Europe. The US runs the largest deficit anywhere in the world. To some extent, that doesn't matter for the US because everybody holds dollars. The US debt is every country's problem. China has the biggest problem with US debt because it's the biggest holder of dollars in the world. The Chinese government holds more dollars than the people do that live in America. So if the US dollars devalue, the biggest victims of that are China. So it's a really, really interesting problem. Everyone else has to worry about their sovereign debt. On the other hand, you have the countries in the Middle East who don't have sovereign debt. They have sovereign wealth funds, as does Singapore, and at the moment they can go around the world and they can buy assets, they can invest for the future. I think importantly though, whilst those countries do have those huge sovereign wealth funds, they also face political unrest such as we've never seen before. Bahrain has shifted from being a country which was investing widely around the world, which was very, for a Middle Eastern country, was easy to do business with, easy to do business in, people felt confident with, and it's effectively almost shut down for the last year because of the political unrest, because of the political problems. So you can see things really shift very, very fast. We come then round to risk, the changes around risk, and risk management is really becoming an increasingly key part of work, an increasingly key part of business. And certainly what we're seeing, driven by this need to manage risk, driven by this need to manage performance, and this need to differentiate between what is investment and what is wasted spend. We're seeing demand for management accounting rising hugely. I think in the introduction it was said I've overseen CIMA's greatest rise in new students. Yes, fine, that's great. But I think I feel a little bit like the successful manager in the 1990s. Every company I visit says we need more management accountants. We spent a decade worrying about IFRS, worrying about Sarbanes-Oxley, and we've actually forgotten about managing the day-to-day performance of our own business. As far as I'm concerned, in my business, we're riding a rising market. So we're seeing natural demand caused by the need to manage a business tightly and well, increasing that demand for management accounting and those skills hugely. Just finally, to move us on and to conclude, a little bit about management accounting, a little bit about CGMA. CGMA, as I said, Chartered Global Management Accountant, issued by a joint venture created by CIMA together with the American Institute of CPAs. We started talking together in 2010. The Americans came to us and said, we need a strong management accounting profession in the UK. We've failed to support our management accountants. We need the best partnership we can have in the world. So between us, CIMA and AICPA, that is what we're doing. We come together, we're driving management accounting, we're driving what we believe is a skill set which business needs, which business values, and which individuals who have that skill set will find will lead them to long, successful and prosperous careers. Certainly, wherever we go, when we conduct salary surveys, we see SEMA people, CGMAs, earning more than their equivalent chartered accountants colleagues, ACCA qualified colleagues, whatever else. Their skills are very much in demand. They're in demand from business. We see those skills as transferable. You're not subjected to any financial reporting regime around your qualification or any tax regime. And genuinely, management accounting is the mobile skill which multinationals buy and use. Companies like Shell report to us that their SEMA people are the most regularly promoted and the most regularly able to move around the world with those promotions of all of their accounting team. And that's a result of having those mobile skills, having that flexibility, and giving their employer that opportunity to use and deploy those skills wherever they're best needed around the world. So, in conclusion, it's a tough world out there, but there are huge opportunities. There are huge opportunities for people with the right education, with the right skills, and in the right part of the world. I think all of you today here studying on this campus have a huge opportunity. You're in a country which has some of the best prospects of any in the world. You have an advantage to gain skills which will give you a competitive advantage and a huge opportunity to be some of the most successful business people in the next decade. Thank you very much.